Hi, this is Dr. Pete on July 8th. We're going to take a look at SPY, which is the exchange traded fund for the S&P 500. So we're essentially looking at the price action of the large cap index. What we see here, this is a weekly chart, and we see the trend has been largely up since the November 2016 election. And then things got a little out of hand in the fall going into the early winter, where we had a bit of climactic action and got overextended. And this was followed in February by a high volume downturn, which we see depicted here on these volume bars, and the move down within this square. Now, what's important to note is we see very high volume down in early February on this weekly bar, and despite a good amount of volume here, we never really go back and penetrate that low. And we've been gradually grinding higher since April or so. And you can see we've been moving up and sort of coiling. Now, what's important to note is 2 weeks ago there was this red bar, which was on pretty high volume here. And we really didn't go anywhere. The price action was quite tight. And then this past week, we started at the bottom end of the range of this bar and finished all the way at the top, basically exceeding this tight high volume bar. This suggests to me that the stock market is winding up for a breakout to the upside. Now, we're not completely out of the woods till we clear this area here where the market had rallied on somewhat high volume in the winter spring, but I suspect, based on what I see here, that we are ready to move higher. Now, should the market open weakly or turn down tomorrow or the next few days, the area to watch is really the bottom of this red bar from 2 weeks ago. That would be 268.49. A close below that would tell you it's time to regain the caution that I had suggested in a prior post. Now, you may be wondering, well, you had to be wrong in saying to exercise caution the past week or so. And the key thing about trading is you're not going to win all the time, and you have to recognize when opportunities are good and the risk is diminished. The only thing that we were talking about in that cautious post was that the underlying technical indicators that we utilize to show that the overall market is healthy and that the majority of stocks are behaving well had turned negative. Made it very clear in that post, with only a few good days of price action, those indicators could turn back positive, which is seemingly what happened at the end of last week. Now, the same thing applies here. Even though those indicators have turned positive and we see some evidence from the past 2 weeks of price action that you should be leaning long, it would only take a few days of bad price action now to turn those indicators and the interpretation of this chart differently. So this is a tricky spot because I suspect the market's ready to explode higher. I think the risk reward suggests to look for an opportunity to go long on Monday. But you also have to be aware of this level, and a penetration of the low of this bar from 2 weeks ago would be a good reason to diminish risk. Thanks for listening. We'll talk to you again soon.